Welcome to the Talk CoinShares live stream with our research team led by James Butterfield, with Luc Nolan, Satish Patel, Alex Schmidt, and Matt Kill. We have a lot of things to discuss tonight, especially with the recent liquidation wave. Guys, we have to go back on this event. What are your analyses about what happened beyond the over-leveraged market? Do you think in the end that players like exchanges, market makers, have mismanaged the situation, to tell that politely?
I think if I can chip in here, I think market makers, I haven't seen any evidence that there's been any sort of wrongdoing or mismanaging. There are some, I'll say unconfirmed because it's not my place to say that it's confirmed, but some Oracle mismatches. So, speaking on Binance, a few weeks ago or even a month ago, they allowed USDE, the Athena stablecoin, as collateral for leverage trading. And they were actually offering weekly rewards if you decided to use that. So obviously a lot of people opted for that. And what happened was someone market sold, I think 80 million or so of USDE on the day of the deleveraging. Liquidity sort of vanished, and so it depegged to around 65 cents only on Binance. Typically, the exchange would use the Oracle price to determine the value of that collateral, but they use the order book price. And so anyone who is holding USDE as collateral basically contributed to the spiral. So there's clearly some form of mismanagement there. I mean, whether that can be to blame for a large part of the liquidation cascade, definitely not, but it was likely a significant portion. So that was something that Binance was actually in the process of transitioning from. I think it was an 8-day window, and this coincidentally happened during that 8-day window. So I think there was a bit of mismanagement there. But then when you look at across other exchanges, Hyperliquid, for example, I think they, although some people were adversely affected from, auto deleveraging, ADL, at the end, the exchange remained fully solvent and managed that situation well. So
and open, I would say. It remained open and operational, whereas many exchanges didn't. And I think that's a really positive thing from Hyperliquid. I saw some quite negative press about Hyperliquid, but to stay available in such a massive liquidity cascade is actually a real merit and a real plus point, I think, for the token and the exchange.
What does it tell about the current structure of the market and these actors? Do we like regulation there? What's your opinion on that? Could have it been avoided?
I think it's a reminder that this is still quite a young asset class, and some of the exchanges, this would be unlikely to happen in a traditional regulated equity exchange. And it has, with a very well-developed futures market as well, and mature one. And I think it is a reminder it's still quite a young asset class, and things like this will happen. But, overall, it was seen very much focused on Binance and not very much anywhere else. And it was very positive to see DeFi and many other parts of the crypto ecosystem be very resilient. I mean, certainly it didn't really rattle ETF investors. We only saw around, I think it was a 500 or 600 million of outflows a few days afterwards. So I'm actually really, given it was such what they call a large daily candle, such a massive, it's a very quick, immediate price decline. It's quite encouraging to see how robust the crypto market overall is becoming.
We are welcoming Chris, by the way. Welcome, Chris. James.
Thanks. Can I actually just comment on this?
Yeah, of course, Chris.
Real quick, because I agree with James. That the regulated markets have all sorts of mechanisms built in for this. I think what people need to remember is that there's a trade-off going on, and so the reason that all these exchanges use automated liquidation and things like that is that they're fairly open to a lot of people that otherwise wouldn't have access to this type of infrastructure, and because of that, there's no real way for Binance to do margin calls in the traditional sense, where you send a polite letter to someone, or you call them and you're like, hey, please top up your account. That's not going to happen if a lot of your clientele are spread out all over the world and you just don't have any infrastructure to collect on anything like this. And so in order for this type of access to exist for that many people, the kind of trade-off that you have to accept is that the infrastructure will be automated liquidations, things like that. I don't think if we get institutional DeFi in the US or in Europe, I don't think exchanges will really look like Binance. This is not to say that Binance was without fault. They had some weird structuring going on that I think they should get some criticism.
Speaking on institutions, James, you started mentioning them, but how are these institutional players behaving during this downturn? Are they accumulating or have they de-risked?
Yeah, I mean, we saw, if you think about the last really quite big price decline, that was February, we saw $3 billion worth of outflows in a week. So a big reaction to the markets. It ended after this liquidity cascade with around $600 million of outflows. So markets were much more resilient, and this week have bounced back. I think there's been a bit of bottom fishing in that respect. Yesterday was $1 billion day of inflows, a chunk into Ethereum and a pretty large chunk of that into Bitcoin as well, and Solana and XRP too. So the appetite is definitely not one of investors running for the hills in that respect. It's quite a constructive one in my view.
Speaking of flows, last week there was like significant inflows into leverage ETF, the 2x Ether ETF. What does it tell about the conviction that the market has in ETF, James?
Yeah, I think so. Unusually, so there's a 2 times leverage ETF by a US provider, and it's not one you generally see much inflows into. It's less popular. People generally go straight 1-for-1 Ethereum. This one saw $450 million of inflows in the space of a few days. So that's quite unusual for such a small product to see such a large number. It also, I think, highlights there is a real element of conviction about Ethereum. And Ethereum was hit quite hard in this recent price decline, and people seem to be using that to buy at low points with conviction.
We'll stay a bit in the US, and I know, guys, that you don't like to speculate, but we can only speculate on that topic. There are growing talks about Trump's close friends influencing the markets. Do you think we have seen manipulation in action during this liquidation wave? Maybe Matthew, by the way. You are in the US. Or Luke, yeah.
Yeah, no, unless Matt, go ahead, Matt.
So the question again, we're seeing manipulation of what exactly, Jeremy?
Of manipulation market manipulation during this liquidation wave from the Trump's family.
There's certainly some, attentive Twitter sleuths that are looking deeply into this, and I think Luke probably has more to say on that because I know he's been quite interested in following the story. Yeah, I'm reluctant to say that there is much of that actually going on. I find it hard to believe. I think there's probably enough to pay attention to, given the the trade tensions with China and the government shutdown. I think everyone's quite busy to manipulate crypto markets, but maybe the thing about crypto, right, is that you could try to obscure your trading activities by going through DeFi markets and offshore exchanges, probably a bit easier than traditional markets. But I'm interested to hear what Luke would have to say about this.
Yeah, I mean, I would say it's certainly possible. Like Matt said, nobody knows for certain. But I think when you look at traditional markets, certainly what we've seen over the last year is episodes where you could quite easily connect two and two and see that there has been, maybe I won't use the word manipulation, but certainly coincidental events that have transpired in equity markets. In terms of what we saw on that Friday was, obviously someone placed a extremely large short trade publicly visible on Hyperliquid shortly before we saw that downturn, and some on-chain investigators then linked that wallet to another wallet that was linked to another wallet. You get the point, that had bought an ENS address that is owned by a semi-public figure, which I won't say because obviously this is unconfirmed speculation. And when you look at that person's Twitter account, they had actually posted a rationale as to why they believed the market was going to go down. It included the rare metal situation, and one of their rationales was that this was big news in China, and it just hadn't been caught on by the West, so it was inevitable that Trump was going to retaliate in a strong way. Certainly possible, but again, when a lot of things line up very closely, statistically speaking, it's difficult to say that it's all coincidental. So, without going much further than that, that's where I'll leave it.
Okay. Everyone can jump in on that question. Actually, you all seen like the Fed's announcement in the US about skinny accounts authorization related to crypto operators. First, can someone explain to our viewers what are skinny accounts when it comes to the Fed?
So I think from my understanding, I'm not extremely well versed on the topic, but there's like the concept of a master account, which traditional banks in the US have, which gives them this sort of direct connection to like payment rails, settlement rails, earning interest, borrowing, etc. It's just like a direct access thing. A skinny account would be the idea of extending some of those liberties to eligible crypto firms that have banking licenses, which interestingly matches up with a number of firms like Coinbase, Paxos, Stripe, maybe a number of others that have applied for banking licenses. This would limit them to a certain number of liberties, so they wouldn't be able to earn interest or overnight lending, that sort of stuff, or borrowing directly. But it basically cuts out the middlemen that they have relied upon. So they would typically have third-party banking partners that would ultimately help them settle, help them move money around, and this kind of cuts that. And so I think it streamlines operations for someone like, let's say, Circle, who has relied on banking partners in the past who have said, actually, we don't want to bank with you because you're a crypto firm, etc. It kind of cuts out that risk. Will eventually streamline their operations, so it'll make things more efficient. Could have pass-through effects on consumers if they're able to achieve a higher level of operational efficiency. Maybe that ultimately improves competition between themselves, and therefore the consumer experience is better. But again, it's kind of above my knowledge level, but that's kind of the gist of what I understand is a skinny account.
Right. Let's talk about maybe some equities and especially the Bitcoin treasuries. We've seen MetaPlanet trading below 1x MNAV and other public companies stocks crashing, notably Nakamoto. Why are so many crypto treasury companies struggling right now? Is the business model broken according to you?
I can start. Yeah, I mean, it was very much of a big trade during the summer, right? I think you were seeing one company pop up almost every day, and this ratio has now dramatically declined. And yeah, I think MNAVs have fallen across the board. But you're right, in that MetaPlanet has seen the sharpest drop. They also saw the sharpest rise before that. I think one thing is that these companies still have that Bitcoin, so I think that's still very interesting. Provides them very powerful financing to whatever they want to build. Perhaps that's not related to Bitcoin, like Simon Garevich mentioned a couple of months ago on Twitter. I think heavily criticized by the community, but I think from a business perspective, it's a way to diversify his portfolio of activities, and I think that could be interesting and makes the company perhaps a little bit less volatile to waves and flows that the markets are seeing now. I think another phenomenon that's happened has been the traditional the crypto equity or blockchain equity investor has rotated away from the treasury stocks in summer towards Bitcoin miners and the AI HPC pivot. So a little bit of a bet on that, especially after the deals that have been announced in the summer, such as TeraWolf and Cypher. More recently, Applied announced a hyperscaler $5 billion deal as well, I think this week. So I think that's stolen a lot of flows from that were going towards these crypto treasury companies, and now they're going towards these data center companies. So yeah, MNAVs were inevitably going to go towards one. I think 4, 5, 6, 7x was unsustainable. But now I think if there is a new catalyst in Bitcoin and other cryptos that these guys hold, I think that could be potential for upside in the short to midterm. Yeah.
Do you guys share the same sentiment? Maybe also about the altcoins, treasury companies, like really related to Ethereum or to Solana? What do you think?
I think there's some skepticism about. So Michael Saylor really pushed the narrative that MicroStrategy was a leverage play on Bitcoin, and I think for a time that lasted, and then it really kind of fizzled out in March this year, when it was very clear that as Bitcoin was rising, MicroStrategy was not rising in the same way. I mean, it went from the original narrative of having a company that has blockchain on balance sheet, and then to this leverage play. And I don't think he's really come up with a really convincing narrative since then to keep the investors engaged in that respect. And I think kind of quite rightly so. It would be good to see some companies with Bitcoin and balance sheet that are perhaps a bit more credible and have a much more stable revenue stream. I mean, Semler Scientific, I think, is a really interesting company. That it's a credible pharmaceuticals company that has Bitcoin on balance sheet. It's just not very much at the moment. So could you really call it a DAT? I mean, the kind of informal assumption we make in the team is if it's got 20% of its NAV in Bitcoin, then it's a DAT, and Semler doesn't have that. But and then we've already had the discussion around Meta and Microsoft with their shareholders about having it on balance sheet, and the answer was no. And then maybe in the future, the answer is yes at some point, and that would be, I think, quite a positive outcome. Have some much more credible companies step up to the plate from that perspective.
I think strategy has, on purpose, been managing their MNAV very closely, right? They mentioned that when their MNAV is very high, they're willing to issue shares. When their MNAV is very low, they're willing to issue debt, and in between, they will issue preferred stock. Doing exactly that, right? They have tempered down the purchases quite a lot. I think markets are not very receptive to this kind of financing right now. Debt markets are a little bit shaky as well, so I don't think they would tap into that. But their MNAV is around 1.16 in the last 3 months. It's fallen about 27%, which is the peer group that it looked like it's among the lowest drops. So obviously they are bigger. They're giant in relation to all the other companies combined, and they're going to be more stable. But I think this active management of MNAV could be something that could make them perhaps a little bit more credible. However, in my personal or my opinion as an investor, there's also the fact that by issuing the preferreds, there's also the commitment with the cash flows that come with it. And I think this doesn't really, I think investors do not really have appetite for that right now.
And that's my worry for a company who has kind of dwindling income streams from its tech business. Where does it go if it carries on issuing more and more pref shares? It's more and more on the hook to deliver that income to its shareholders. And where does it come from? the answer is probably it continues to dilute shareholders more at some point, which you can only do a certain amount before you really start annoying your investor base.
Let's move on about a topic that we mentioned earlier during this emission, the perpetual future space, especially behind Hyperliquid, is becoming extremely competitive. Ledger is gaining traction. We've seen Binance and most notably CZ pushing Aster. Pacifica on Solana, extended on multi-chain, I guess. They're all starting to do well. What separates the winners from the rest at this stage? I don't know if someone has an opinion on that, but the volume is starting to be really big on this perp future DEX.
I think, as a user of perpetual platforms myself, I think the one thing is very obvious. The switching cost is quite low. The financial switching cost, right? The main thing you're looking for from the financial side is fees. That's the main thing. Obviously, Ledger right now is running with 0 fees, and at the same time they're running a points campaign. So that's obviously going to bring people to your platform, and that's valid in the face of fierce competition. The second thing you're looking for is the user experience. So how easy is it to use? What are the spreads like? What's the liquidity like? Those things kind of come naturally. I think overall, what really is going to set out the winners from the losers is how can you actually build a moat past how can you embed a switching cost? And those two things are going to be commoditized, which is like the user experience is going to converge to a unified one. There is a best way to do things. There's not really much optionality there. And fees are going to get compressed. 0 fees obviously doesn't make any sense because otherwise the platform will make no money in the long run, but that's a way to get in the short term. So I think when you look out there broadly, Hyperliquid has the first mover advantage in the sense that it's now kind of perfected its UX, it's perfected its perpetuals trading platform, so it's looking ahead to HIP3, all these offerings that are differentiated, that have taken them a long time to build, and the others will have to play catch up. So, although I think some of the others are doing more volume, the longevity will tend towards who can actually build moats and increase the switching costs. Because at the moment, there is very little switching costs.
Matthew, yeah?
I agree with everything Luke said. I just want to add, I think it's interesting that it's kind of becoming an increasingly competitive space because perps are perhaps like the biggest crypto product invention that's actually come out of the space. I believe it came out of, Chris might correct me here, but I think it came out of BitMEX.
Yeah, exactly, yeah.
Back in the day, right? And it's become, and by say successful, I mean, has product market fit outside of just crypto itself now. Maybe you could argue prediction markets is getting there now, but to Luke's point, there is going to be, I think, consolidation and, who can actually build a moat and establish, the best liquidity and fees and user experience and so on and so forth. And right now, I think the state of play is Hyperliquid kind of foresaw this a bit and came in as a big disruptor in the space. But Binance has massive distribution, the largest offshore exchange. They have a reputation globally that's quite strong across a lot of countries and users. And they're, catching some sentiment, I think, within the community as well. I'm pretty interested to see how this one plays out.
Hyperliquid was the center of an article today published in Bloomberg, if I remember well. And it ended with a question that I share myself. How long can this kind of DEXes operate without KYC? I know that Hyperliquid is supposed to be banned in the US, but a VPN does the trick, and it's the same with the others. So how long can it continue like that?
In my view, for example, something like Uniswap will never require KYC because I'm never actually moving money from Uniswap into my bank account. It's not really dealing with the sort of AML side of things. And the same pretty much applies here. So, on Binance, for example, when you withdraw, you are withdrawing to your current account in fiat. Hyperliquid is a floating piece of code run on a server that is being utilized to trade things on a blockchain. So, you know, I don't think there will ever be KYC. And interestingly, on that note, if you actually read the ASTO terms and conditions, it says that in the future they might have to basically ask for your KYC, because there's probably going to be some form of integration with you know, off-ramp rails that Binance operates. That would be kind of a logical step, given that there's such a close connection between the two. So I don't think, you know, people could spin this in a negative light and say, oh, it's facilitating this, it's facilitating that. Well, actually, not really, because it kind of is the same scope as a sort of, you know, ERC20 token trade is, or a transfer between two people. Like, are we going to KYC if I send, you know, 1 Bitcoin to Matt? That's the way I see it. That may be a biased view, but I think it all comes down to, are you connected to the real world, quote unquote? And if you are, then you do need to have the appropriate AML KYC controls.
I think there's some quite cool things happening. Keyring, which has been around for a couple of years, is using zero knowledge proofs to link. Say if you have an account with some exchange and then you're making some DeFi trade or something like that, there are solutions out there that can connect the KYC you've already done with an exchange and link it to other trades you do throughout the crypto ecosystem. So the technology, the functionality is there. I think keyring is actually quite an eloquent solution for that kind of problem that could be implemented in many different places, but maybe it's a bit too early for that just yet.
Yeah, my inclination is that the existing Trump admin is kind of letting the crypto space be and innovate and give them a bit of a sandbox. I mean, today, right? Very recent news: Trump pardoned CZ, right?
Yeah.
There's been rulings on Tornado Cash, which is probably the like a decent parallel. Obviously, there's nuanced differences here, but as far as going after a company in UI of which is serving users, however, the code is open and public on a crypto system for anyone to call. But it just kind of seems like there is a bit of hush hush, don't ask, don't tell. You guys can do it as you may. We're going to be friendly from a regulatory and enforcement perspective in the current regime. But maybe that changes in the US down the line, right? I think you have to have that in the back of your head, as there's not necessarily, we've had the Genius Act, but there's not an ongoing list of legislation that is safeguarding, right? Different practices. I think, a lot of this leadership-wise across agencies and via executive orders could be turned around in an unfavorable leadership scenario.
Amongst the other hot topics and the last for tonight, we have to review the recent news surrounding prediction markets. Polymarket, of course, Kalshi. I'll put Limitless aside. They are raising funds at crazy valuations. So I know that prediction market, Polymarket is banned in the UK, it's banned in the US, but in France, but we're all using them in a way or another. So do you think they are justified, these valuations?
Yeah. Sorry, go ahead, James.
I was going to say, I really like Polymarket in particular. That's the one I've settled on. It's cool that it's on a decentralized platform. I find it incredibly useful. I've stopped using Twitter actually to get a feel for people's sentiment on what's going on in the markets. For me, the most useful one recently has been how many days until the US shutdown ends. And what was really interesting, real time, we saw a sudden drop. At the moment, it was saying around, well, it's more than now, it's about 83% at the moment, saying it will last longer than 30 days, which is probably going to break records for prior shutdowns. And we already had some, and then it suddenly plummeted earlier this week, and I wasn't quite sure why. And then immediately an hour later, I saw that it was a presidential economist, White House economist, saying that he thought it would be resolved this week. Actually, it felt like his comments were taken a little bit out of context, and you could see that sort of happening real time on Polymarket. And that's such a cool thing as an investor to see just sentiment change and see such immediate effect. You can pick out pretty much any kind of subject. The big one, obviously, was when would Zelensky wear a suit? And, there was a lot of contention around that, which Luke can elaborate on more than I can. But I think this is a fascinating industry. There was obviously a predecessor to this called Predict It that wasn't decentralized. That was quite common in use, but this seems just way more efficient. And I like it the way you can look at size of trades to understand just how much gravity, how much impact this is having. So I think, like, as we speak at the moment, there's $2 million on how many days will the federal government be shut down. So that's not a bad trade. It's not a bad indicator for what's happening.
Luke?
Yeah. Just to add to that, I mean, I think James put it well. I think there's the sociological aspect of it kind of brings a new dimension for analytics, researchers, people who are following these things closely that previously didn't really exist. The example James gave is a perfect one. How many days will the government shutdown last? The last time it happened, it was really just a guessing game, and people in the know would know. So it kind of democratizes access to information, especially because there's money on the line, right? So there's not really an interest in people being wrong. So you kind of find that point of equilibrium where information is the most available. I worded that badly, but hopefully that made sense. And in terms of the valuation question, firstly, what was Polymarket's 12 billion, 9 billion, somewhere in those realms, and then Kalshi's looking to raise at a similar valuation. I mean, firstly, just valuations in general, compared to 5 years ago are higher. So I think there's something to be said about that. But the other thing is, they just both of them signed partnerships with the NHL, where the NHL will provide real-time proprietary data. One of them signed with DraftKings to be their clearinghouse. Yeah. So I say that valuation is most definitely warranted. ICE took a stake in Polymarket. It's certainly going to become embedded in more and more ways to provide accurate real-time information, and where money is on the line, so it converges to the accepted source of truth. So I think it's very possible, and at the risk of sounding completely wrong 5 years down the line, these valuations are going to look tiny. In 2030.
I would add, I think we have to be cognizant of the fact that crypto and just technology in general, when you look at some nascent technology that comes along, it's quite hot. It takes quite some time to see its revenues delivered. I mean, if you take cloud computing back in 2010, it was where we are now with things like prediction markets and AI. And obviously, we've seen a huge amount of money flood into AI. And back in 2010, we saw a huge amount of money flood into cloud computing. Now, it actually took around 5 years for that revenue to be delivered. And if you look at something like NVIDIA, I mean, it really didn't start delivering on its revenues till 2023. So we won't have the true answer for this for 2, 3, 4, 5, maybe 5 years. But that's quite common in tech. And so I don't think we'll fully know. And I think what we really need to kind of have a handle on right now is how good is the technology. And I think something like Polymarket and Kalshi are fantastic tools, prediction market tools.
With a $10-ish billion valuation for Kalshi and Polymarket, maybe this is a question for our equity analysts, but should we expect an IPO soon for one of them? Is it like a probability? Satish or Alex or Matthew, I saw that your mic is open.
I kind of have more something to say on the previous topic, so I'll say it really quick, and then I'll hand it over to Alex about IPO potential. What I'll just say is the DraftKings acquisition of the company called Railbird, like $250 million acquisition, told a lot to me. There's a sense of urgency among some of these betting platforms and gambling sites, which have become massive in the US. You'd be hard pressed to watch a sporting event without seeing some ad for sports gambling, and it's quite ingrained, I think, anecdotally in the culture of sports. And the fact that prediction markets are more financial contract based, they eventually amount to a 1 or a 0 at the end of a certain event, adds some interesting characteristics to users interacting with this sort of thing. For example, if you make kind of a live bet on a sporting event to say someone's going to win, and then a big kind of play happens, you'll maybe get some kind of like buyback odds to make your bet the other way. But on a prediction market, it's a fluid market that's tracking in live time back and forth. And I think the partnership with the NHL that Luke noted before, and this DraftKings move, is just indicative of the fact that these prediction markets may actually capture a decent amount of sports gambling, which in its own right is increasing, I think, over time, and has quite a large TAM and that's just in the States, and these things can be global platforms.
So last question, IPO soon for one of them. Satish, Alex, what do you expect?
I think there are a few factors to take into account here, right? I mean, the first of them is if the platform itself is not allowed to be used in the United States, how can it be even IPO'd there, as a legit business in the country? Perhaps could have a foreign IPO like Canada, like Galaxy and a few other companies did in the beginning of this cycle of IPOs a few years ago. But yeah, that's one thing to take into account. I think there's appetite there for sure. I mean, you've seen the funding rounds, and they should be very successful, and it seems to be a business that's maturing. Even though it's quite new, but it's I think markets like this kind of innovation. They perhaps might see it as a new unicorn in this space, and people are looking for ways to get exposure into crypto. Like I mentioned before, people cycled between treasury stocks, now data centers, and perhaps prediction markets and other types of trading crypto could be the next wave. And you have seen some successful IPOs in crypto this year, so I would say why not. But I think the biggest restriction is whether it would be approved as a business that's IPO-able in the United States.
All right, guys. James, Luke, Matthew, Chris, Satish, and Alex, thank you for your time. It was great as usual. See you very soon, and have a good night. Take care, everyone. Bye.
Thank you.
Bye-bye. Take care.
Thank you, guys.